Stellantis faces $2.7 billion loss amid tariffs and restructuring challenges. Imagine a scenario where one of the world's largest car manufacturers faces a staggering financial setback. Stellantis NV, the parent company behind beloved brands like Jeep, Ram, and Fiat, has announced a preliminary loss of $2.7 billion, 2.3 billion euros, for the first half of the year. This significant loss can be attributed to a combination of factors, including the impact of tariffs imposed by the Trump administration, ongoing restructuring efforts, and sluggish sales across various markets. While the full earnings report is scheduled for July 29th, the preliminary figures reveal the challenges Stellantis continues to face following a tumultuous 2024, which saw the departure of former CEO Carlos Tavares. The company's performance has fallen short of analysts' expectations. Yet there are glimmers of hope as new CEO Antonio Filosa takes the helm, with Stellantis shares rising more than 2% in early trading on Monday. But here's where it gets controversial. Some industry experts argue that the tariffs are just a symptom of deeper issues within the company, suggesting that Stellantis needs a more comprehensive strategy to turn things around. And this is the part most people miss. Despite the financial setbacks, Filosa is optimistic about the progress made so far, noting that the company has made significant strides compared to the second half of 2024. Global vehicle shipments for Stellantis declined by 6% in the second quarter, with a particularly sharp drop of 25% in North America. In his message to employees, Filosa acknowledged the tough first half of the year, citing external challenges such as tariffs, currency fluctuations, and a challenging economic environment. However, he emphasized that the company has made meaningful progress during this period. For the first half of the year, Stellantis reported revenues of $86.7 billion, 74.3 billion euros, a decrease from the $92.2 billion reported in the same period last year. The company also disclosed pre-tax charges totaling $3.8 billion, 3.3 billion euros, related to program cancellations, the elimination of U.S. emissions penalties, and other restructuring costs. President Donald Trump's tariffs have had a significant impact on Stellantis, costing the company $350 million, 300 million euros, so far. To mitigate these costs, Stellantis has reduced imports from Europe and scaled back production at plants in Canada and Mexico. Chief Financial Officer Doug Osterman previously estimated that the annual cost of these tariffs could range from $1 billion to $1.5 billion. As a result, Stellantis burned through $2.7 billion, 2.3 billion euros, in cash during the first half of the year. In response to the ongoing tariff-related uncertainties, Stellantis decided to suspend financial guidance in April. The company released these preliminary figures ahead of its full first-half earnings report, which is due next week. Second-quarter vehicle shipments were affected by production pauses in North America, as the company transitions to new products in Europe. Lower fleet sales in North America also contributed to the decline in deliveries. Filosa and his team are confident that the second half of the year will bring better results, especially in the lucrative U.S. market. Key models like the new Jeep Cherokee SUV are expected to boost sales, along with the reintroduction of gas-powered models and variants due to relaxed emission standards under the Trump administration. In the United States, Stellantis reported a 10% drop in second-quarter sales, a trend that contrasted with the gains posted by most other major automakers. However, the company did see some positive signs, with sales increases for its highly profitable Jeep and Ram brands. Filosa highlighted several recent product launches in Europe, as well as the return of the Cherokee and the Hemi V8 engine in the Ram 1500 in the United States, as initiatives that will drive growth in the coming months. He also mentioned that the company has made tough but necessary decisions, such as discontinuing the hydrogen fuel cell technology development program, to focus on more profitable ventures. Looking ahead, Filosa aims for 2025 to be a year of gradual and sustainable improvement. He encouraged employees to embrace the challenges and leverage their creativity and energy to help the company recover. What do you think? Is Filosa's approach the right one? Or does Stellantis need a more radical overhaul to regain its footing in the automotive industry? Stellantis loses 300 million euros to U.S. tariffs. Impact on Vauxhall? Jeep, Fiat, and global auto trade. Stellantis, the automaker responsible for well-known brands such as Vauxhall, Jeep, and Fiat, has announced that it has suffered a staggering loss of €300 million, equivalent to £259.6 million or $349.2 million, due to tariffs imposed by former U.S. President Donald Trump. This financial blow is attributed to the strain tariffs have placed on international trade, alongside the company's inability to fulfill its intended production targets as a direct consequence of these changes. Since April, a hefty 25% tariff on imported vehicles has been in effect, reshaping the landscape of the automotive industry. Trump's tariff policies have raised serious concerns across the global car trade, with manufacturers like Jaguar Land Rover, JLR, even halting their exports to the U.S. temporarily to reassess their strategy in light of the heightened fees. Stellantis, which boasts a diverse portfolio featuring 14 distinct brands, including Alfa Romeo, Maserati, Citroën, Chrysler, and Dodge, has reported a worrying decline in shipments to North America, dropping by 25% within the 3 months leading up to June this year compared to the same period in 2024. Overall sales figures for this quarter have also shown a 10% decrease, as indicated by the preliminary sales data for the first half of the year. Although Stellantis operates manufacturing plants right here in the United States, it also produces vehicles across several other regions, including the UK, Europe, Canada, Mexico, and South America. For the first half of the year, the company anticipates revenue figures around €74.3 billion, but they are also bracing themselves for a net loss of €2.3 billion, which encompasses the adverse effects of these tariffs. Trump had previously claimed that implementing these tariffs would invigorate the American car manufacturing sector. However, less than a month after the tariffs were initiated, he rolled back certain tariffs on imported car parts, highlighting a potential inconsistency in his approach. In May, the UK managed to negotiate a reduction of car tariffs to 10% on a limit of 100,000 vehicles, a significant increase from the earlier 2.5% rate. Other nations are actively engaged in negotiations with the U.S. regarding these tariffs, and recently, Trump has hinted at the possibility of elevating tariffs on the European Union and Mexico if those countries retaliate against the U.S. tariff framework. He has even signaled intentions to impose tariffs on Brazilian exports, threatening to raise those to a staggering 50% if Brazil does not withdraw a case involving far-right former President Jair Bolsonaro, who has faced legal troubles related to an alleged coup plot. Stellantis operates 3 manufacturing plants in Brazil, where it produces vehicles for Fiat, Jeep, and Citroën. However, Stellantis is barely alone in grappling with the fallout of Trump's tariff decisions. In June, JLR revised its profit forecasts downward after halting all exports to the U.S. in April, but resumed shipments in May once the new agreement with the UK took effect. Just last week, JLR revealed plans to eliminate up to 500 management positions in the UK due to continued pressures on its sales resulting from the tariffs. With such dramatic shifts affecting an entire industry, one must wonder, are these tariffs truly beneficial for American manufacturers, or are they merely creating a ripple effect that could harm jobs and profits across the board? What do you think? Join the conversation below.